what we're trying to do here, I'm going to keep saying it, is to give you not just one or two tools, and we're not giving you everything we have because we can't possibly do that, but we're trying to give you some of the best stuff that we have so you have a lot of good tools to use. And all of these things have to work together, and they all come in. Every one of these tools has its place in your trading system. It either falls into the research category or it falls into the actual trading category. And the research category are your cycle charts, you know. And if you want me to just I'll quickly just tell you how a research should go. You know, and that would be the first thing that I would do to research a market is I'd get 10 or 20 years of data on it. And the first thing that I would do would be to take Jeanne's cycle charts, all those big charts, and I'd get a printout of 10 years of weekly bars on that market and get it to print out at the scale of those cycle charts, so where the years are in sync with the cycle charts. And if you can't get the scale quite right, go down to Kinko's and enlarge it or reduce it slightly so where it fits the scale. And then you can look at it and you can just go, you can compare the price movement with each cycle individually for that time frame. And if you can isolate 3 or 4 cycles that work with regularity on that chart, you know, or if you want to make up your own cycles for Sun Mercury, the Sun Mercury waltz, or you know, Sun Venus conjunctions or whatever, anything that's not on there, you know, make your own cycle sheets. Just keep making cycle sheets. Make them all to the same scale. You know, what we used to do is we used to print them all on transparency sheets, and then we could just lay them right on top of the market. You know, this was before we had the program. We did all this crazy stuff to you know, and we used to always have to print up draw all the planetary lines on transparencies, and then we'd get price charts and overlay them, and you had to make sure the scale was correct and da-da-da-da. I mean, you'd think you got it hard now. It's just picture what we were doing 5 years ago. I did a 5-year backtrack on the wheat with all the Sun through Mars planetary lines on it and all the aspects and everything by hand, you know, drawing all the bars by hand in symmetric format. You know, did all that trade by trade, everything on big, you know, graph sheets. And I'm having them framed now because they're beautiful. It's got all different colors, and I've got all these different notes and all the cycles drawn on there and all kinds of stuff. I learned so much doing that, though. I learned so much doing that by hand. I recommend that you do things by hand just to see what it's like. It's like if you spend a day carrying water, you know? You spend a day carrying water for your shower, for your toilet flushing, for your drinking water, for everything. You'd realize just how much water you use in a day, you know? And if you do a 3 or 4 year back test on a market by hand, you'll realize just how much your computer does for you, and how much you should appreciate it, you know, just the fact that it's even there, you know? So anyway, take your long-term cycles and match some long-term cycles to it. Try to find 3 or 4, you know, or even just 1 or 2 that work very well on that one market. Take those and put them in your trading plan, okay? That becomes your mood indicators. You know, is this market in an up cycle? Is this market in a down cycle? Are the cycles conflicting? Is it in a sideways market? That tells you a lot about where your position is going to be on a daily basis. Look at the natal chart. Find out if the natal chart is up or down energy in it. These are your research tools. Look at, well, let me just get my notes here. If you have a research program like FAR or Bill Meridian's program or something, if you guys are using programs like that, you might want to check out all different kinds. There's, you know, you can do all kinds of research studies. You might find something that works fantastically on here that we don't even know about, you know, like that Mars through the signs or something like that, you know, that creates a an interesting cycle when it's in fixed signs or mutable signs. Or I mean, there's no end to what a particular market might respond to. But you know, don't limit your research to what we've given you. You know, do anything that you can find. Or if you happen to notice that it's not responding to any other cycles, but it's got some kind of weird cycle of its own, and you can isolate it. You know, like every 2 years, you know, every 27 months, this market reverses, and you can't pinpoint a cycle to it. It doesn't matter. You know, that's a usable tool. It's a cycle. You know, it doesn't matter if you can pinpoint the cycle. It's like my 56-day thing. I can't really pin it to anything exactly, but it's a useful tool on the equities markets, you know. So yeah, that's what my last one was, whatever works. So then once you've done that, then take like 1 year chunks out of that market and start looking at short-term cycles. You know, look at the Sun-Mercury aspect. You're going to get 6 Sun-Mercury aspects in a week. See how it responds to those. Is it creating a nice count out like the wheat does? Is it, you know, that 1, 2, 3, 1, 2, 3? Is it doing that with the short term? And when it's trending, how is it responding to those aspects? Like if the wheat is trending in a nice running trend, on a clean trend, the 2 Sun-Mercury aspects that fall in the middle of the count should be retracement lows. It should go boing, boing, and then top. It should go ding, ding, top. You know, those should be retracement lows. And that becomes a useful tool because whenever the wheat is trending and there's a Sun-Mercury aspect coming up and I know that I'm in the middle of a cycle, I look for that aspect to be a retracement low. If it's not, then I know something is amiss. Something is amiss. And that's what happened on that last high on the wheat, that 398 high. We were trending along and we're in an up cycle, and all of a sudden we hit a high and it stopped, and it hit on the high, and I knew that something was wrong because it hit on a high. You know, it should have hit on a retracement low. So you know, if you find things out like that, then they become very, very useful tools. You know, because you know that this is not going to continue, this is going to stop. You know, so use the short-term cycles, minor planets on the natal chart, information like that, to create short-term scenarios, and then come down to your actual trading period, the time frame that you're looking at right now. Okay, look at the past few months. Find the last major reversal or the last 2 major reversals and figure out what aspects were controlling those reversals. You might want to do some aspects. The aspect study becomes part of the cycle study, because if you're putting it into a cycle, if you can fit a cycle to it, like a Sun-Pluto cycle. When we were in Australia, I looked at this one stock, and this stock reversed on every single Sun node conjunction. Every single one. I mean, it was just like just almost a perfect ping pong from Sun node conjunction to conjunction, just like this. And then it started trending up, and it would go up, and it would hit a Sun node conjunction. It would drop back about 3/8, about a third, and then go up and hit a Sun node conjunction, drop back a third, and then go up. And you know, so there was a really recognizable pattern from aspect to aspect. So you can pinpoint some critical aspects. You can look at the last couple of highs and lows and see if those highs and lows were correct with those aspects on critical harmonics. You see what I mean? And then you look forward and find out what aspects you have coming up. How those aspects relate to your long-term cycles. If you've got a Sun-Mars cycle and you've got that's working well with it, like on the Dow, and there's a Sun-Mars opposition coming up, I'm going to be watching price on that day to be critical, to be correct with that Sun-Mars aspect to trigger the reversal, you see? If it's Sun-Pluto, if it's whatever it is, Mercury-Sun, Venus-Mercury, doesn't matter. That aspect becomes very critical within the few days either side of the aspect, price-wise. And so that way you can be ready when the aspect hits and the reversal occurs. And then you need to go back on your long-term stuff, and you need to test, or at least go back a couple of years, 2 or 3 years, on daily bars, if you're trading dailies, and get a system that works on it of technical indicators, you know, dynamic trio, weekly and daily dynamic trios on it. The weekly to delineate the long-term trend, and the daily for initial entry positions off of major turning points. And test it, you know, go through, use your scroll bar and move through one day at a time and say, if I was trading this market back here in 1995, every day go forward and say, what would my position be? I'm long, I'm short, what's my position? Where's my stop? I mean, why is my stop there? And eventually you're going to come to a place where you say, okay, I was long here, and okay, and this day I got stopped out. The next day the price reversed and kept going long. I wish I hadn't gotten stopped out. How would I, is there any way I can qualify that stop, or where do I get back in? And so you start, and you write a rule for that, and then you test that rule, and you start developing a system of rules, and you just keep testing it, and write down, then once you get it to where you think it's working quite nicely, test it for profitability. Prove to yourself that it works, because that psychological reinforcement, that proving it to yourself over and over again, makes it a lot easier to trade the system when it comes time to trade it. You need it. You've got to have it. You can't take somebody else's tools and just go and trade them unless you're some kind of machine. You know, and there are people like that who can do that. They can take black box systems or whatever optimized systems that other people created, and they can trade them, but usually they're not trading their own money. I can tell you that. They're trading for a bank or something like that. They don't have any vested interest in the result of the trade, you know. But as soon as the bank or puts a commission on it, then they're going to start to screw up too, just like you are, because their livelihood, you know, rises and falls with their performance. And so, exactly, anytime emotional connection, or even if it's just an egotistical thing, you know, whether there was any money riding on it or not, you know, even if it was just an ego thing, like you just want to be right, you know. You know, everybody hates not everybody, but most people hate to be wrong. So do those things, and then when you've got your system back tested, you've got your cycles in order, you're ready for you're ready for anything that can possibly happen. And then when it comes time to trade, when you get your signal, take it. Don't hesitate. Get in it. If you miss it, forget it. Okay? If you miss it, just forget it. Don't chase it. If you don't get your optimum entry point, forget about it. Okay? Move on to something else. It's a learning experience. You know, if you weren't there at the right time, whatever it was, bad luck, improper psychological reinforcement, whatever the reason was, recognize it for what it was, leave the trade alone, because there will be another trade down the road. You know, the worst thing you can do is chase a trade. And when you're in the trade, don't move your stops. You know, don't try to accommodate the movement of the market by giving it room to breathe, moving your stops around. That's the beginning of a real long and horrible spiral when you start to do that. And I speak from experience. And I guarantee you, anybody that's ever traded will go through or has gone through a period like that where, you know, the perfect position to be in as a trader is to be naive. You know, because you come in, somebody gives you some great tools, you're lucky, or you just have some great instinct, or, you know, for the market, and you get lucky. It's beginner's luck. It's that first pull of the slot machine arm, and you get that big payoff, you know. And you get that naivety works in your benefit, because you know so little about the market that you say, I'm going to follow somebody else's rules, you know, or I'm going to follow one simple rule that I thought up myself. And then you go, wow, that was easy, that was fun, and you start sitting there watching it, and you start to learn about it, and you start to find out, hey, look, this worked. Look at this. Look what happened here. I'm going to use that in my trading plan. You didn't test it though. You just found something that worked one time and you didn't test it, and you throw it in your trading plan. The next time it got you in a lot of trouble, you know. So Everybody has either been there or will be there at one point or another in their life. And you have to make that step from naivety to knowledge at some point, and you have to try not to blow yourself out while you're doing it. You know, you have to try to maintain while you do that. So,
if it doesn't hit right on the number you're expecting, then...
I have a saying, and I have this in big, bold, typeface letters on my computer that says, "Don't move until you see it." So, in other words, if it's not behaving exactly like I want it to behave, you know, if it just doesn't feel right, I forget about it. I'm just going to leave it alone, and I'll wait for the next one. Or if I miss it, if I didn't see it.
Yeah, how large of a
Yeah,
parameter do you
I mean, seeing it is everything. Well, I mean, if you're talking about intraday trading, if I'm waiting for a major reversal to occur on the beans or on the, you know, and I've got a price point, and they did it on the overnight, and I just happened to miss it because I was out to dinner with my wife, and the next morning they opened considerably higher. Well, that's just too darn bad because I missed the optimum entry point, which happened on the Globex. You know, I'm not going to jump in it the next day when it gaps up. Well, there are situations when I will, but only when I can qualify a very low risk that's at least as low as my initial entry would have been. Because there are situations that will happen like that where, and I'll tell you this one because you'll love to watch it on the grain markets when you get home. And it probably happens on lots of other markets. Can we go to the overhead? And that is a situation like this where you have congestion, prices just kind of congesting in an area, right? And at the end of this congestion, here comes a sun line, trine line, here's a Pluto trine line, and here's your correct aspect, right? And price closes down here, and that's a Friday. There's a big report on Monday morning, okay? So there's a lot of hedge pressure in the market on Friday because the bins are full, or whatever the fundamentals are. It doesn't matter because the pressure it's hard for them to get that market up on the close because nobody wants to be a buyer into a big number, you know. But the long term, you know, it may be that the weekly dynamic trio is coming up, and the long term is long, but you still would be very hard pressed to go long on that close, wouldn't you? You know, I mean, you'd have a hard time justifying it, maybe because the daily dynamic trio just flipped right here, and it's above the market, you know. So you've got no indication that you should be long on a short-term basis. So what happens is you got this trine aspect or square aspect, whatever it is down there. On the same day, you've got say a Mercury squared Jupiter, and the 90-degree Mercury line is up here. And the 90-degree Jupiter line is right here, and that's another aspect that's heading on the same day. Okay, what will happen the next morning is price will open here, it'll touch this aspect and then go up. And you see this every day. I mean, not every day, but every couple of weeks this happens on the grain markets, and this is what happens when they gap. They gap from aspect to aspect, because if they were always reversing on every aspect, they'd never move. They'd always be range bound. They got to move sometime, and when they do move, they gap from aspect to aspect. That's what the gapping is all about. So when it opens up, if you're there on the open, and you have that aspect on your chart, and you know it's there, and you see them open a penny above it, and in the first 5 minutes it holds the low, and you buy it right in here, you can risk that. You can say put a stop a penny and a half or 2 pennies below that aspect because it should not come back through it. It should not come back through it. So there's a good buy. So if you missed it on this day, you can get it on that day, and you still got a fairly low risk. See what I mean? And your daily dynamic trio is going to appear down here, but you can still keep your stop below that Jupiter line until the daily dynamic trio catches up to it. Okay? Or whatever system you're using. Until your system stop comes up there, you have to use that as a stop because you used it as an entry. You see what I mean? You use that aspect to qualify your entry. You have to use it as a stop until your stop catches it. You can't say, okay, well, it didn't hit me today, so tomorrow I'm going to go ahead and move my stop all the way back down below that previous low. No, you can't do that because then you've taken a late entry point, and you've gone back and you put yourself at a huge risk for the next day because it may just pop up here, hit something even more powerful up here, and then slam you out, you know. And if you move your stop all the way down here, you lost a big chunk of money on a, you know, on a late entry point. That's the only time I'd ever jump in a market late, is if it does that exact scenario and I was there on the open to catch it. And a lot of times I do in this situation, in this market, a lot of times I do have my broker on the phone, on the open, because he's going to get the first quote before I do. And I'll say, just give me the opening price. Just tell me what the opening price is. And I know where the aspect is. If it, you know, if I'm watching the wheat and the aspect's at 380, I'm saying, just give me the opening price. And he comes, as soon as the open comes in, he says 381, I say, buy it. You know. And as soon as I say that, and as soon as he puts the order in, I say, now put a stop in at 379, because it shouldn't come back through that 380 point where the aspect was, you know. And that's it. And if it comes back through there, I'm stopped out, that's it. I lost a couple of pennies, big deal, but I had to try to catch that trade. You see what I mean? That was the only opportunity I was ever going to get to catch that trade if the trade was going to continue. So Peter did this on the beans a couple weeks ago. Did a very nice job. He did. It wasn't long on Friday. Monday morning, gapped up above an aspect, and he got in right on the open, and he put his stop right below the 5-minute range of the low of the first 5 minutes, and it turned out to be a very nice trade. It was almost limit up by the end of the day, and so, you know, he made some money on that deal. But that was a fairly minor gap compared to some that we've seen this year. That was only about a 3 or 4 cent gap. Okay, let's see. So now that we've got all of this knowledge in our heads, how are we going to use that knowledge? Let's. I had done a workup. We never did get to the last charts in my last section, but I think you can figure them out yourself. And those are in relation to the beans. We're looking for a buy. The trend is up. The cycles are up. We're still looking for buys. We're just looking for a retracement. And I was just showing you how we find points and find clusters of points. And we look for those points for resistance or support. And then we look to our technicals for buys. And we still had not got a buy on the beans. So. And I think the low now is down to 711. And but if you're looking at those charts, you have to remember that that's the November chart, and the January-March contracts are trading lower than that. So we're looking at the lower points. And I think our next target low is 708 or something like that. So.
That's what it did today, 708.
Oh, well then, there you go. So now you've got a qualified buy on the beans as long as 708 holds the low, and you get your daily signal. So. Yeah, we've had about 2 weeks of congestion. It's about time to go. That's generally the way it works. You get a 1 week of moving up fast. You get 2 weeks of congestion, and then a gap. 1 week of moving up, and then congestion. That's how the grains move. They don't just go well, sometimes they do. But most of the time it's like in these real jumpy kind of, and the gold does that too. You notice that too, the way it just jumps from level to level and levels off and jumps up and levels off, and that's the way the beans do. And they can really chop you up if you don't know what you're doing. You know, if you can't hang into a position, or you don't know when to get into a position. You know, the trick with the beans is to get a good price and then hold on to it. You know. Hang in there while they're running. So the S&P, that's what we're going to look at today. And we know that on the S&P that we're expecting another down move, because in the very long-term cycles, as I was talking about, are sideways to down for the next couple of years. The Sun-Mars cycle is on an up phase, but that's a minor cycle, and it's not going to top until next May. So we don't hit a high on that cycle until next May, so I think we still got some down left in it, a little bit more down left in it. I think we might have seen the low here for the while, but I think we're going to have one more run at that. And also because we have a major aspect coming up, the Sun-Pluto conjunction and the Mars-Venus conjunctions coming up. So what I've done in my mind, knowing what I know about the S&P, is I've kind of come up with a couple of scenarios. We had this high on the Mars-Pluto conjunction. We had a second little high on the Mars-Venus conjunction, and actually that high and the low were on Mars-Venus conjunction. So it did the whole move so fast that it put in a high and a low on the same aspect. And then we've come back, and we put in a little high there, and we came back down, and then we put in we're back up here now. We're right back almost. We're back at, this was 980, we're right here at 970 is the high. So we were looking at that 965 and we were expecting that to hold. And what they did was on the overnight, last night, I don't know what they've done today.
Back down.
Back down again, yeah. I don't
962 was the
yeah, I don't expect them to stay above it. But what they've done is they've come up here and they stopped at 965, and then they took it out a little bit and they went up to 970, and now they're trading back down here. Now, what my scenarios are for this is what I'm looking at is basically standard top patterns. How do tops form? Okay, tops either form in like spike exhaustions. You know, either you have like a one top hit and then the market just shoots back the other way, which is not the case here because it's not as volatile as it has been in exhaustion situations. It's a fairly decent looking trend. So our top forms are like this. You either have a high and you might have a second high much lower, something like that, or you might have a situation like that. And this is actually the one that I expect to be the situation. And what we've had is we've got that high there, and I expect we see another high, and then I expect to see a slightly lower high. And I think that we might see the second high setting up really fast, like that. Now the other scenario is that I'm wrong, and it does something like this and hits a low there. But either way, I think that point is going to be critical, that Sun-Pluto conjunction. And I'm still watching it with great interest. I would have preferred just to feel really good about taking a short off of it. I would prefer that price never took out that Pluto line. That's the main Pluto line, and it should carry a lot of weight. And I would have preferred that price didn't take it out. But I do know that there are several aspects happening up here slightly higher. The Jupiter-Saturn sextile. There's a Mercury-Saturn trine up here. There's several other things above that could draw the price up a little bit higher. But I'm kind of looking for a little double top here. We may have just seen the first top, and it may retrace back a little bit and come up and hit that Sun-Pluto. But knowing what I know about the cycles and knowing what I know about how a top forms, if I get a double top on that Sun-Pluto conjunction or a retracement low, that's going to tell me where we're going from that major point. That's a major aspect, and I want to know which way the market is going off of it. So what the market's done is it's going to kind of spiral into it and then take off one way or the other. So we're just going to watch it as it comes up. If it traces off for the first part of next week and then comes back to touch it near the end of the week or late in the week and holds at 965, then that's going to be a sell. If it goes ahead and rambles on through it and you get isolated bars above that point and it comes back to where it can put an isolated low in at that point, then we should see prices going a little bit higher. See what I mean? Now, we have a time window between major aspects. We have a time window from about the 27th of November on the Sun-Pluto conjunction out to about the 16th of December for the Venus-Mars conjunct Neptune. That's our time window for a move. So I always look for moves to happen between major aspects, which makes sense. You've got major power creates major reversals, and lack of power leaves price free to move. So the point I'm making is that I'm kind of working out a scenario for my daily approach to that market, you see. And at the same time, I'm trading this market on an intraday basis. Where we're looking at this market on an intraday basis, and I do that in quite a different way. But the reason I'm showing you like this is because I'm doing both at the same time, and you can see how I do both. How I do both. How I would do both. How I would trade intraday and then use an intraday position to put it into daily. And it's the same concept as using a daily position for a weekly position on a stock trade. You see, you take the daily position off of the major points of power, off of the initial reversal, and then when you get weekly confirmation, you build your position. And this is exactly how I would handle this trade on the S&P if it does what I think it'll do, and I get that second top on the Sun-Pluto conjunction. I would try to get at least one contract sold there, as near to the conjunction as I could, and I would use my first intraday sell to take that trade. You see? And if that market were to drop quickly, well, all I needed to do is make a sizable drop to put me in a decent amount of profit before the end of that day. Okay? To give me a manageable risk. And if I get in within a couple of points of the high, then I've got a manageable risk. You see? And that gives me the comfort level to hang on to it overnight. You see what happened on, what was it, yesterday? Yesterday they went up and they traded 965 and a half, hit the point, and then they closed that market at like 63 or 64.
62.
Yeah, 60.
Closed 62 yesterday.
Yeah, closed 62 and some change. So if our entry point would have only been at about 64 at the very best, even if I went all the way down to the 1 minute bars to get my entry, I would have not been in the market before 64. And on the close, I was only 2 points in profit. There's no way I could hold that. There's no way I could hold that, especially not knowing what they can do to that market on the overnight. So I couldn't legitimately hang on to a daily position on the close of that day. So I had to let it go, and it's a good thing I did because they went up to 670 on the overnight. And you can't run a stop on the overnight, so unless you want to sit up all night and watch it, and I personally like to sleep. So, at any rate, what I'll show you is how I'm gonna analyze this chart now that I've done my daily analysis, okay? And this is just like, if you're looking at a stock, you've done your long-term analysis, you've done your weekly analysis, because for me, long-term analysis on this market now involves I'm only looking at what is the trend for the next 8 days, 5 days to 3 weeks, that's all I'm interested in. But for you, it might be 3 to 5 months or the next 6 months to a year or whatever. But now I've determined that what kind of scenario I want to see setting up over this time frame, and we have been considering the trend as being up. We've been saying the trend is up, and now we're expecting a reversal, and we're waiting for the trend to turn down. And every day I'm going to be looking at points. I'm going to be looking at where the power is, because I'm still trading this on an intraday basis, and I'm concentrating on the long positions until that market stops and reverses in the other way, at which time I want to try to get my best entry for a longer term position and continue to trade it on an intraday basis with another position. I'll take one position that's a long term and I'll trade it intraday with another position. And you can do this with the wheat, you can do this with stocks, you can do this with any market. If you get a nice entry point on a daily to weekly position, you can scalp it, so to speak, on the little moves in between. If you can catch nice little retracement lows and buy them, take 10 cents out, get out, but you still got that one position that's sort of hanging on. And this is what I like to do. I don't like to pyramid on positions, but I'm trading two separate plans. You see what I mean? As long as you keep them separate in your head, And you know that this scalp position is not going to stay on your daily position. You're not going to leave it on overnight, or at the end of the week, you're not going to leave it on over the weekend. You know, you're just taking you're going to try to take a little bit extra out. You're not going to leave it at risk, okay? But at any rate, to isolate power on a daily basis, this is what I do. What I've got here is the S&P 1 minute bars. We're looking at 1 minute bars, and we're looking at last Friday, the 14th. At the end of the day, I'm looking for the power for Monday's open, okay? And I want to start isolating energy for the next Monday's open, and I'm using my systems. That's what they're there for. So what I did first of all is I fixed a range on my chart. I look at the range of that day, and I'm going to go a good distance up and a good distance down, whatever I figure is possible range for the next day, because I don't want the price to shoot out of that range, and then I have to scramble to find points higher or lower. You know, I want to find everything I can in a potential price range. And if you're doing daily bars, you would do this on a weekly basis, and you would only be looking at maybe the 1st through 8th harmonics. I'm going to look at the 1st through 8th and the 9th, 10th, 12th, and 15th, and even out to the 20th to find all these points. And you'll start to notice, you see these planetary lines coming together here. That's all I'm looking for is coming together, aspects. Prices, planetary lines coming together and forming aspects. Okay, we've got one there, we've got one here, we've got one down here, and we've got one down here. This is my 12th harmonic system, 30-degree lines. And what I've got is 4 aspects within this price range at multiples of 30 degrees. So I go in and I use my drawing tools and I mark those points. Okay? And I might print the chart out and I might make notes about what those points are, you know?
Isn't that the same aspect just repeated?
It is 30 degrees lower, yeah.
Okay.
But we're looking at 30-degree lines, so it's going to repeat every 30 points. This is a huge range on the S&P. I mean, but look at the ranges we've gotten into. We were having 30, 40-point days. So usually it used to be like if you're looking at the S&P, you might have an average of an 8 or 10-point day would be a big day, and you wouldn't have to deal with these repeats.
Okay.
You know.
You've got 9:45 daily up there, don't you?
Oh yeah, I'm looking at the 9-minute bars.
Oh, you said 1 minute.
Oh well, I'm sorry, but I'm using the 9-minute bars because I get more range. If I'm looking at when I'm doing my research, I'm going to look at the 9-minute bars and the daily bars. It really doesn't matter. You could look at the 1-minute bars. You just scrunch this. What I'm showing you is a scale. But I have 3 plans that I use on the S&P. I have a 1-minute plan, a 9-minute plan, and a daily plan. Okay, and the 9-minute is the one that I reserve strictly for finding points. The 1-minute plan is one that I watch all day. And the daily plan is the one that I use for finding the long and medium and short-term cycles and the major points, okay? But this is my 9-minute plan. This is the one that I'm going to use to find the points, and then I'm going to apply them to my 1-minute plan, okay? Because on my 1-minute plan, I don't put planetary lines on it. I find the points and I mark them with horizontal bands during the trading day because I don't want all those planetary lines going all over the place. I just want to know where the exact power is, okay? So we've got a point here, we've got a point here, we've got a point there, and we've got a point there. Now let's move on. We're not going to have every system here because I only printed charts out for systems that had actual aspects occurring. If there was no aspect occurring, I didn't print the chart out. There's no point in it. Here's another one. We've got a point here, we got a point here, we got a point here, we got a point there. So we go and we mark those points too. This is the 10th harmonic, and you'll start to notice some of them overlapping. And I'm starting to put these points on there too, so you see the little lines starting to form. So we just keep going through that. Here's our 9th harmonic. We got here, here, and down here. So we put those lines on there too. And this is so simple that anybody can do it.
What harmonic is
The ninth harmonic. But it's not important which harmonic it is. I'm just going through every single one, putting the points on there. Yeah. Now, you don't want to do this. I mean, you don't want to do this on a, if you're on a stock and you're holding it for weeks at a time, you don't want to do this every day. You want to do this once a week, and you want to isolate your attention to aspects on the first 5 harmonics, because anything else isn't going to create a major reversal, okay? It's, I mean, and if you start looking at 12th harmonic aspects and 10th harmonic and 9th harmonic and 15th harmonic and 20th harmonic aspects, you're going to drive yourself up the wall. Because you're going to have points all over your chart, and you're going to be sitting there all day watching it to see how it reacts to all these little points. Don't worry about it. Just look for the conjunctions, the oppositions, the squares, the trines, and the quintiles. And if it's a quintile between, say it's a Mercury-Mars quintile, it's not going to be nearly as powerful as if it's a Jupiter-Saturn quintile. You know, so you got to remember those things. It's not, you gotta think, remember the power of the aspect and the potential of the aspect to reverse the trend. I mean, if I saw my stock coming up and hitting a Mercury-Jupiter quintile and stock on that point, I want to be on my toes, but I don't want to dump my position. Okay, I want to maybe squeeze my stop up a little bit tighter, but I don't want to dump my position, because you dump your position, you have to pay your commissions to get back in. And in stocks, it's, you know, paying your commissions is a big part of the equation. You know, if you can't make enough money out of each trade, so you don't want to let go so easily. You want to be a little bit more fierce holding on to your positions. You don't want to take every little point as a sell signal. You know, it just gives you a little bit, it gives you a little bit more knowledge about what's going on with the market. You know, okay, well, of course they met some resistance there. There's a couple of aspects there. So, you know, I'm not surprised that the price stopped moving for a couple of days, but I'm not going to panic, because everything is up, but I know what's happening, and knowledge is good. You know, it's good to know what's happening. But you know, it makes you especially all the more keen to make sure you put your stops in. So we keep doing this, and we keep finding points. Okay, we just go through every harmonic, we find the points. So you see, we started getting a lot of points up here at the 955 level. We're getting a big, huge cluster of them there. And this is always going to happen. You're always going to, as you go through, you're always going to end up with clusters. Okay, I mean, it's got to happen, because things are matching up. There's another one at that level. I'm going to go through these real fast, because then we're going to get into the actual.
So there aren't any others on this page?
There's another one right there. Yeah, because we're getting into the larger harmonics now, so the aspects occur much farther apart. See, that last page was the 5th harmonic. So your lines are 72 degrees apart. You're getting much less. You know, the aspects become fewer and farther between as you go out, as you come in on the harmonics. You know. You'll see this when you go home and you try this. You'll see how it works. I mean, because you start out at the 15th harmonic, you're going to have aspects all over the place. And by the time you get down to the 1st harmonic, you're just having aspects once every couple of months.
Thomas, you're using a 9-minute chart. This could very well be a 15-minute chart.
It could be any chart that you want.
Chart. It's just that you get the lines.
Right. It doesn't matter. I'm just looking for the. This is my. Yeah, right. This is my projected price range, possible price range for the next day. I'm giving it a potential of 20 points up and a potential of 30 points down. I could go out another 10 points even, you know, and make sure. And I would normally go out to at least 30 points and make sure. And then on my daily chart, I'm going to mark major points even farther out than that, in case we get something happening like happened a couple weeks ago. You know, where it just starts flying. I want to know where it's going to stop. You know. Not just me, but other people. So we're starting to get a cluster down here at 914, and you notice whenever I start getting a cluster, I label the exact point where the most powerful aspect is in that grouping. And the most powerful aspect is obviously the one on the lowest harmonic. So when I noticed that right here, what I've noticed is I've got, this was a Jupiter-Saturn sextile, and we had Mercury coming into it over that weekend. I looked for the exact point where those three came together, and that was 914.4, and so that point, and I just do that by putting my crosshairs on and holding it right on that spot. And whatever it tells me, 914.4, that's a key number. Or I might say 914 and a half, you know, just round up to the nearest half or the nearest point. But you can be that exact, you know, you can be that exact. So we're still developing our key points. We got here, I did print one out with nothing on it, just to show you. That's the fourth harmonic. There are no aspects. Look at the look at the degree divisions of the lines. That's 90 degrees. That's the fourth harmonic.
So where it crosses at 9:05 over the weekend, you would not consider that
Where what crosses?
the fourth harmonic? I guess it's Mercury. I can't tell down the bottom.
Well, it's crossing. It's not crossing anything else. It's crossing a mark I made.
Oh, okay.
Yeah, my marks have no significance
Okay.
on the
So
fourth
you were able-
on the fourth harmonic.
Okay, so you were able to erase the marks to the left of a certain point?
No, the marks stay. I just changed the lines. I'm just changing the planetary lines. Yeah. And then okay, so now we've completed half of the equation, okay? We did all of the harmonics going up. Now we're going to do all the harmonics going down. Okay? And if you're trading a stock or you're trading a daily commodity, don't bother to do this. Excuse me, because I don't bother to get into doing the mirrors all the time. If the trend is up, look at the positive ones. If the trend is down, look at the negative ones. And if the trend is down, look at the major harmonics, first and second and third, maybe positive. If you're trading something on a daily, more long-term basis, don't look at all of the mirrors too, all your mirror systems. If it's trending up, look just at the positive ones. Okay, just forget about the mirrors, because the mirrors are not going to affect it when it's moving, when it's trending up. If it's trending down, look at the mirrors. Well, look at the mirrors and then look at like maybe the first 1 through 4 harmonics because you won't find very many points on the major harmonics. But when it's coming down, it's more likely to be correct with a mirror aspect than it is to be with a positive one. And actually, it's more likely to be correct at a place where two different ones coincide in the same place. So anytime that's why I'm pointing out that's why I'm doing this, because you see how they start piling up. You see? And the mirrors will coincide with the positive points. There'll be different aspects, but they're hitting in the same place. And they're creating more power. So here we've got something else right up in that same area, where that other major point was on the positive lines. We've got the same thing happening there. We got here, here, and here. Okay? And we're going to go through all the mirrors. That's the 12th harmonic. This is our 10th harmonic. Again, we just keep circling. We're getting more and more stuff up here. We're getting more and more stuff right in here. So you see two very powerful points starting to appear. Okay? Okay, here's more. Getting more up here and more down here. There's a lot here, a lot going on the 10th harmonic. So,
You move too fast sometimes. The circle is too fast to even, you look up there and it takes you a second to look down and try and find them, and then by that time you pulled it off the thing and I can't get off.
I'm only circling the places where the planetary lines cross. And I mean I don't mean to be short with you, but you can see those points right here. There's a planetary line coming here. There's a planetary line coming there. They're crossing there. That's the circle. Here's one coming here. Here's one coming here. They cross there. That's all I'm doing. You can do that quite easily. I don't mean to.
Thank you.
I'm trying to get through it, and I think that it's fairly simple to, that part of it's fairly simple to understand, just looking for the points where the lines cross. So, what we end up with on page, and the reason I'm doing this is because it's already after 5 and I've got to go through, I want to get to the actual technical part of this system so we can see how the trades actually developed. So what we end up with is a big bunch of lines, big bunch of points, okay? And I'm not going to use all those, okay? I am going to use this one because there are several here. I'm going to use that one. I'm going to use this one. I'm going to use this one. And I'm going to use this one, okay? And then the next thing I want to consider is among the minor points, all the little minor points that I've got marked there, which ones are in the range of the previous day's price, which ones are out of the range of the previous day's price. Because anytime price reverses on an aspect, it's going to be an isolated high or low, okay? It's not going to do it inside the range of the previous day, right? Because if the range of the previous day already went over that point is moot. Okay? If the range of the price takes out a point, the following day that point is moot. It doesn't have any. It does have power. Like these, see, the range of the price on this Friday was from here to here. Okay. So anything in that range is far less powerful than anything outside of that range above or below. See what I mean? Because it's isolated. It's an isolated energy point outside of the range of the price. And if it's a market that trades overnight, you want to include the overnight range with the daily range when you look for the power. Because sometimes they make key reversals in the middle of the night on this market.
And do you consider, say, overnight as part of yesterday's range when you're going in?
I consider it part of today's range because that's the way they consider it. Sunday night, it starts on Sunday night, and that's part of Monday's range. So Sunday night to Monday's close is one day. And then there's a break, and then they start, and that becomes the part of the next day. Actually, what I do is I consider from midnight to midnight, But really, actually, there's not really any kind of delineation when you get into a market like that where they're trading 24 hours a day. If it's been 20 hours since they hit that point, I start to look at it again, So these points become more important than these points in here. These are less important, and these are more important. These are more important. Okay? That's not to say that I'm going to forget about these points in here. I'm just going to give them very, very, very low standard. I call them minor points. Okay, now we're going to go and look at the next day, the following Monday, and we're going to put what I've got is I've got 1 minute bars, and what I did was I put a 9-minute dynamic trio and a 45-minute dynamic trio on there. My time frames, and I could just as easily be looking at a 3-minute bar. It doesn't matter. A 9-minute bar, a 1-minute bar, a 3-minute bar. The point is or a 9-minute bar. It doesn't matter. The point is I'm trading the 9-minute time frame into the 45. Okay? Now, just for those of you who might be confused about this, I'm going to mark the 9-minute dynamic trio with this green line. And then our 45-minute dynamic trio, I'm going to mark with this red line. Okay?
Thomas,
Yeah.
the factor of 5 between 45 and 9, obviously a Fibonacci relationship, you'd split the day into 5, all that kind of stuff.
Yeah.
You just happen to choose.
Yeah, if I split the S&P day into 5, I get 81 minutes.
Okay.
Actually, for the last 2 weeks, you get 84 minutes, but now they're going back to 8:30 open, so you get 81 minutes. And that doesn't work that well. So I use a 45-minute, which goes 9 times into the day, and a 9-minute, which goes 5 times into the 45.
But this isn't a 24-hour chart.
No. This is just the daily chart, because if anybody here is going to trade the S&P, they're probably just going to trade it during the day. But I have made notes here that reference overnight action, okay? Because the overnight action, I look at it, but I'm not going to trade it, because I don't, like I said, I like to sleep, and I can't run stops.
How does that affect your indicators, though? Like the dynamic trio, if you're going to have these huge gaps?
Mm-hmm. I found that including the overnight action is valid. I haven't done it here, but at home I have a 24-hour chart. So it runs 24 hours a day. Most people aren't going to trade the S&P, so I'm not going to get into that. Most people are trading just daily things that trade on a daily basis, and so that's not going to affect their situation. I didn't want to confuse the issue. So we're just going to look at the dailies. Okay? But I do, at home, I think if you're trading this market, it's a 24-hour market, and you want to run your indicators on a 24-hour basis.
And do the same with like the currencies, like the yen or the Swiss franc, which trade a lot overnight.
If they're traded heavily overnight, you want to watch it. Mm-hmm. I think so, yeah. I used to wouldn't say that. I used to say, nah, forget it. But I've found that in the past several months, I've found that on this market especially, it is very key. Because sometimes the whole mood shifts overnight. And if you're just watching the day session and the day session indicators, you're behind the times on the open. The whole thing has already changed.
Do you ever use tick charts, like 13 ticks, 55 ticks, 21 ticks?
No.
So you just use...
No, and you know why? Because ticks vary from server to server. If I have S&P Comstock as a server, I might get 4,000 ticks a day on the bonds. If I have Signal, I'll only get 1,000. So, it kind of takes the logic out of it, And ticks don't have any. There's no connection really between ticks and volume. There's connection between ticks and volatility, but not ticks and volume. Because one trade could be 1,000 contracts or one. I don't attach a huge amount of energy to that. I do attach importance to volume, but not ticks. Okay, so what happened was, this is Monday morning. Here's where the day opened, right here. Okay, and I just as an aside to tell you how complex I make this. On Monday's morning open at 8:12 in the morning, the sun was opposite the moon. It was full moon, and it happened at 8:12 in the morning. This market opens at 8:15, right? I'll tell you where the sun line on that open was, or actually maybe it wasn't this open. Yeah, it was the next day. I'll show you on the next day when we get there. But I'm watching those aspects, and I'm only watching that like a half-hour window. So I have a PowerPoint that only lasts like a half an hour, but it tells me a lot about what's going on the open of the day, So, and that's just that you'll get to that point if you continue to work and work and work. You'll get to that point where you can do that with confidence, and it just helps me. It just helps me to determine what's going on. At any rate, the day opened right here. Okay.
The sun was opposite the next day.
The next. Pardon?
I was talking about the sun being opposite. You said something about the sun being opposite the moon.
It was a full moon, and it happened right on the open, right at 8:15 in the morning. The exact aspect. If I look in the live planetary time clock,
Yeah.
it was on Tuesday.
Okay.
Was the exact time, Central Time, Chicago time, was 8:12.
Yeah. On the day.
On that day, yeah.
That's what I was-
Not this day, but the next one.
Oh, the next. Oh.
We'll get to it tomorrow. We'll get to it in a minute. When I get to tomorrow. Let me get through today, and then we'll get to tomorrow, okay? At any rate, you see the 45-minute dynamic trio was short coming into the day, right? It was above the market, okay? And coming into the day, in the first 45 minutes, see, I've got my minor points marked in here too. These are minor lines, right? Then when the double lines out on the outside here, those are major lines. Let me just, I guess I should explain that. Those are minors, the doubles are majors. You see the light lines going horizontally across the screen. Those tell you where the minor points are and the major points, and those are just directly copied off of my research chart. I write down the exact numbers, minor, major, I go in here and I put them on. And I put a double line for a major point and a single line for a minor point. So what happened on the open was we had a quick sell right here, but the sell signal closed right on a minor point. Okay? And we had nothing on the high here, and we didn't have anything on the overnight high to tell me to sell it. So I'm gonna qualify that situation, and I'm gonna say I'm not gonna sell it. But if you wanted to take every trade, which I think you should do, I would have taken a much diminished position on a sell without any kind of energy behind it. Because what's going to happen on every single day on this market, and every single week or month or year, depending on the time frame you're looking at, you will always find your best trades off of the major points. And this is what I mean by don't move until you see it. You know, if it didn't come off of a major point, I'm not interested in it. I'm really just gonna, it just doesn't look good. I mean, I'm spiraling around a minor point right on the open there. Let me zoom in on that. I'm spiraling around a minor point there, and I get this kind of half, you know, not so good sell. I have no point, not even a minor one on those highs coming into the opening range. This is not a good sell. And if it turned out to be a great sell, I don't care. I missed it. You know, because I'm really, really going to be picky. And I think you need to be really, really picky if you want to make money in the markets. You need to pick and choose your battles. So anyway, we came up, what happened was then we came up and I had two major points up here. What happens is I had two major points at the top, two double lines, and my 45-minute dynamic trio. That's perfect, okay? And at that touch right there, and that point was 920, well, there was one at 921 and there was one at 922. Well, 921 and a half and 922 were our two exact points on that day, or I don't know, it was right at 20.
What were they?
What aspects were they?
Yeah.
I don't even care.
Okay, well, I mean, what I'm trying to say is what kind of aspects are we talking about for major points?
Well,
Why are we calling them major?
That came from the collection.
the reason why they're major is because I've, on an intraday basis on the S&P, I'm going to use anything out to the fifth harmonic. If it's outside the previous day's range, it's major. If it's outside the previous day's range and it's an outer planet aspect or a conjunction, it's even more major. But these two were not. They were like minor major.
Okay.
Okay? They were like minor major. You'll get a feel for it, you know, and you'll see if it's a conjunction or a trine or a square, because as you go in on the harmonics, you'll say, oh, on the fourth harmonic, that's the same point, that's a square. That's important. You know, on the third harmonic, I got a hit over here on that same point that I saw on the 15th. That's a trine, you know, so that's why I keep adding lines every time they hit as I come down harmonics. I put a mark there on when I was looking at the 12th harmonic. It hit again on the 6th harmonic. I put another mark there. It hit again on the 3rd harmonic. I put another mark there. And by doing that, I've just told myself that it's 3 lines. There's 3 lines at that one point. That's a trine. I mean, not necessarily a trine, but I knew if I saw 3 lines there, I'm going to go back and give it a second look and see exactly what it is. And, you know, if it's getting multiple hits, that means it's hitting on multiple harmonics as you go down. That means it's a major aspect. That means you look at it again to see exactly what it is. Okay? Anyway, we had two minor major points there and our 45-minute dynamic trio, okay? So we had a technical sell backing up, a technical resistance in the short trend backing up planetary price points that were outside the previous day's range. So you couldn't ask for a better sell. And this is a situation where I wouldn't even wait for a signal because the 45-minute basis is already short. Your stop is right there. You don't even have to wait for the 9-minute dynamic trio because you can just use that 45-minute dynamic trio for your stop. See what I mean? I don't have to wait for this sell right here because I can just take a position right there. I can go ahead and sell it. See what I mean? And this is just like, it would be the same situation if you already owned a stock, you already had bought a stock, and it retraced back to the weekly dynamic trio and coincided with a planetary point. Just buy it, again, because you're not going to ever find a lower risk buy than that, and you've already got the longer term confirmation, you see? And you don't need to see the crossing the daily dynamic trio again. Just go ahead and buy it there and use that as your stop because your long-term stop is already there. Okay? So we sell it there. We get confirmation here, and you could add to your position on the confirmation if you wanted to, but I would suggest if you got a good position there, just leave it alone, let it go. Okay? And if we just use that 9-minute dynamic trio as a stop, we would have been in here and out here. But if we look at the next major point outside the previous day's range, we see that price came out and touched the minor point right above it. There's two of them right together. Okay, I made a note there that the overnight low was 902.5, right? And then it spiked down and hit a 903 low, and that's pretty darn close, and I'm not going to ignore it, and I will get out very fast. And I'm not going to get long because I have nothing telling me to get long. I'm not going to go against my technicals, but I am going to take profits on that scalp, okay, on that short. Now, I mean, I'm not even talking about if I was in a daily position. This is just my scalping, okay? And if we're talking about stocks, your long-term position isn't affected by this. If you got a good buy off of the weekly dynamic trio and it went a few bucks in your favor, $5, whatever you need to pay your commissions and make some money, then just take your profits and your long-term position is still intact. You see what I mean? So this was a great intraday scalp from here to here. Now, I said take profits quick, and you might not be that fast. You might not have gotten out till up here, But the way to handle that would have been if you saw that here's a major point, we're trending down, I would have already had an MIT down there. I would have already had a market if touched order to buy that back because, sitting in the market. And if I put my MIT on that minor point or slightly above it, I would have gotten filled right in there on that MIT. If there's a major point, just put an MIT there. Okay? Just use that in your favor. So anyway, we couldn't buy it here because the 45-minute dynamic trio was still short. Even though we had a reversal off of a major point, we still can't buy it until the 45-minute line turns long again. We can buy it here, although I wouldn't. Why? Because my risk at that point on that close was all the way down to here, below that step. That's about a 5-point risk. And I don't want to get into anything with a 5-point risk. If I can't get 2 points or less on a risk, I don't want to take it. And you can determine your own risk to reward ratios. You can, develop your own feel for how much pain you can put yourself in, But for me, on the S&P, 2 points is if you're trading like this on a 1-minute chart, on a 9-minute bar chart or whatever, you should not ever be at more than a 2-point risk. You should never. Except maybe on an initial daily position. I might want to give that 5 points, 4 or 5 points, just to try to get positioned for a longer term trade. But on these hedges, on these scalps, on the intraday, I'm not going to ever put myself at more than a 2-point risk.
Even though they cut the contract in half, you still follow the same rule.
Well, it used to be 1.
Oh.
It used to be 1-point risk. When you've got this kind of you've got these exact numbers, there's no need to ever have to be at more than 2 points of risk. You know, and it was 1 point of risk when the market was moving a little bit slower. When the market got a little bit faster, yeah, you had to go out to 2. But, you know, I was glad when they cut the contract in half. You know, the brokers wanted to do it because they make more money. But, and I know a lot of people that weren't glad when they cut it in half, but I think it was a good idea because it's insane. The volatility in this market, you know, is insane. But at any rate, it's a great market to show how this works because it works really well. At any rate, you had a major point, and then price comes out. What I wouldn't buy here, I would buy right here. Okay? Why? You tell me.
Wait a minute. Earlier in the day, you had your stop sitting at the 45-minute DT. Why aren't you putting it at the 9-minute DT now?
Well, once I get into a trade, I'm going to take the fastest stop I can get.
Okay.
But I didn't. Oh, are you talking about on this one? Why I wouldn't buy it? Why I'm talking about the buy wouldn't come till the 45?
Right.
Because I don't buy against the trend. The 45 tells me which direction the trend is in. If the 45 is above the market, I can only sell. If I can't buy it until the 45 flips, and the 45 didn't flip until that point. Okay? But at that point, it was a bad buy because it was a 5-point risk. So I didn't. When it retraced back to a minor point and within a point of the 9-minute dynamic trio, then I would buy it because you can put it in a 2-point risk. Okay? And then we shot up here and we hit a major point. We had an MIT. We sold it. Okay? Never ignore the major point. Oh, I'm sorry. Never ignore the major point. Okay? And I said, do not sell this close to the close. I don't mean don't sell the position that you bought long. I mean don't go short. Okay? I'm not thinking about shorting it. I can't short it anyway because the 45-minute dynamic trio is long. But in case you ever find yourself in a situation where you think a good trade's setting up in the last 10 minutes of the day, and you're trading if you're an intraday trader, I'm talking about, don't do it because the last hour of the day even I wouldn't do it because it doesn't have enough time to give you a decent amount of profit. Why bother with it? You know, it's just like if you were if you had been long a stock a long time, and you're coming into an area where you're expecting to see a major top, and you're about a week and a half, 2 weeks away from that. I'm not going to put on a new position. I'm going to stop trying to scalp at that point, and I'm going to start concentrating on just getting out of the main position.
Now, that other buy that you said, why is this a good buy?
This one?
Yeah, my answer is that, well, it came down and it hit that minor line and was above the DTO.
Exactly.
Okay.
Exactly, that was it. You had a combination within 1 point of a minor planetary point, and a technical line. So it's an excellent buy. Okay. Now this one, I hope I won't have to draw the lines in here. We'll just run through it. So our day started right here. Actually, that was the previous day's close, and you notice on the open, the 9-minute dynamic trio flipped. Okay. The 9-minute dynamic trio on the previous day's close was short, and the 45 is long. And right on the open, the 9-minute dynamic trio flipped. You can't buy that. Why? It's too great a risk.
Too great a risk.
On the open there, this is where it opened, right? That's the day divider right there.
Oh, okay.
It closed here and it opened here. and the 9-minute dynamic trio flipped directions right on the open. Okay? As soon as it opened, the 9-minute dynamic trio flipped. Actually, not as soon as it opened, the 9-minute period had to close first. But it flipped right away. But I was just saying, why wouldn't you want to buy that? And it's the same reason that we had before, because your risk when that 9-minute period closed all the way down to here is huge. So we can't do that. But then, oh, this is that day when the God, a mess. This is that day when we had the full moon on the open. Okay, and the sun line was right here. Okay, and the moon line, the 30-degree moon line, was right like that. You see what it did? It gapped, opened right on top of it, and just rested on it for the first half hour of trading. And then once that energy started to fade, it took off and went to another planetary point. But on that day when it opened, I said we're gonna pivot off of this point, 922.3. We're gonna pivot off of this area on the first trade. Okay, and that's what it did. It just sat on it, and because it was supporting on it, we knew that before we could get any kind of action, it was going to probably go up a little bit. And it did, and it went up, and so our best sell became this point at 926.4. That was a great sell. Okay? But we can't sell it because the trend is up. Okay? So we don't have any kind of a sell. So price comes all the way down here. I mean, we could sell it here if you wanted to be, wacky about it, and you trust your points. And some of these guys that I talk to do, because I give them points every day, and they do that because they've got their own little systems that they're using or whatever. I don't care. I just tell them where the power is. But I would not have sold that point because I have no technical backup. I have nothing there except for the planetary point. Okay. I want to have some kind of a technical backup. At any rate, though, we came down here. We got a minor line here. If you did sell it, this was your profit zone because of the minor line in the 45-minute dynamic trio. You don't want to sit there and hold on to your position and say, well, maybe they'll take it out, because they probably won't. The two of them together. So this was our profit zone, and it was also a buy zone. We have the minor line, and we got the 45-minute dynamic trio within a point of that, or what is that? It's about 1.5. It's close enough. You can go ahead and buy it there. If you don't want to buy it there, you can wait till it gives you the buy up here, and you can't buy it there, but you can buy it here. Okay. So, and all we're really interested in this kind of a situation is one good trade every day. We just want to find one good trade every day, and some of these guys, one of these guys takes 3 points from profit every time. He just takes his first 3 points, he gets out, and then he might take another trade, but later on he might be more aggressive because he's playing with their chips, where he might just take his 3 points and then go to the ice cream shop or whatever, just leave. But the point is that if you can find one good trade every day, or if you're trading daily, you find one good trade every week, or one good trade every month, and you make money consistently with it, even if it's only a little bit, you're making money. You're building a base, a solid base, not only a solid base of money, but a solid base of hard, fast rules that you follow. Okay?
Is the dynamic trio basically placing a lot of faith on this indicator?
Yeah, because I've been using it for a long time. I'm a symmetrics trader, okay? But I don't use symmetrics on intraday because not on this small a time frame. On like a 45-minute bar, I might look at symmetrics for my confirmation. But like with symmetrics, you've got some trades that are much better than others, that are much high. The percentage of profitability is much greater, and if those set up, I'm definitely using them. Huh? Oh, that's a whole other, that's something that Robert teaches. You can ask him about it.
And so you don't use metrics on intraday?
No. No, but because this works. This works really well. And symmetrics is very complicated. This is very simple. You see, simple is good. Symmetrics takes too much time to figure out. You can't figure it out that fast when you're trading in this fast time frame. It takes too much time to figure out. I don't like that. I like, if I'm trading a daily, yeah, I'm going to trade symmetrics because I think it's a very robust technical system. But if I'm trading intraday, I'm just going to, this is what I'm interested in.
At about 11:30 on that chart.
Uh-huh. Right about here.
Yeah. Why is that not I see you taking profits right there. When it dropped back down, would that be a good
Sure, you
buy
could.
back point down at the bottom there?
Sure, you could, but I wouldn't.
Why?
Why? Because it just hit a major point.
It's probably keep going down.
Okay.
It just hit a major
That's
point.
right.
I'm not
So
going to
that
buy.
could've been a reversal.
I'm not going to buy back into a major point. Okay, but you see what happened was it went through the major point, and then you could buy again. Anytime after that point, you can buy it again. Okay, but you had too great a risk there. You had too great a risk here. Then right here, the 9-minute dynamic trio is short. You can't buy it. Okay, and the 45-minute dynamic trio is way down here. You can't buy it. Here was a pretty good buy because the 45-minute dynamic trio shot up here on the close of that period. Okay, but really, you never got a great buy, but that was a good one.
Yeah.
The best buy was right there. And if you did buy it there and you didn't take profits on the next major point, then you were dead, obviously brain dead or asleep or something happened. So we bought it. We could have bought it there. That was about if you bought it there off of that line and say you got a fill right in here somewhere, your risk back to that 45-minute dynamic trio would have been about 25, about 2.5 points, and that's marginal. That's good. You could do that.
Just to the left of that was the buy area.
Yeah.
Why would that be a buy area when it's closed down?
Because it took out that major point and came back to it.
So you wouldn't be concerned
Anytime
about buying into that
anytime a
trade?
major point is taken out, okay, and price retraces to it, it becomes a buy or a sell. If price goes through a major point and comes back and touches it, it becomes a buy. If it goes through a major point and comes back and touches it, it becomes a sell. And so that's one of my rules because the point hasn't lost any power.
Repeat the rule again?
If price takes out a major planetary point, it's just like the gap rule that I showed you, right? If price took out that major point and came back and touched it, that's a buy. It's exactly like the gap rule, except in this case you just have a fast market, a volatile market, took out the point, came back and touched it.
But if it didn't take that point out, you're not going to buy going in as it approaches the major point.
I'm not going to buy into that point within a few points of it. If it were to back off again and say it backed off and the 9-minute went short right here, and it backed off and came back down here while the 45-minute dynamic trio was still down here, yeah, I'll buy it back into that point again, sure, why not?
If it went through that major point, then it's lost its effect.
No, the point has lost its effect, but it's still a great buy when it comes back to
That's what
touch
I
it.
mean. But it's
Yeah.
lost its reversal effect.
It's lost its major reversal effect, but it's still a great buy back into the trend. Yeah. Yeah.
If price goes through.
That's a major rule. I mean that's why that gap rule is that one I was talking about. That's the only time I would ever buy into a gap is if I had a major point supporting it. If I had a planetary point supporting it. It's the only time I'm ever going to do that. What?
Excuse me, but I gotta get this right. If price goes through a major planetary point, it's a buy.
When it comes back to touch it.
When it comes back to touch it.
Mm-hmm. This was a pretty dead simple day. Sometimes you get days like this where there's really no question about what you're doing. You got the day opened, right? Price retraced back to, you got a minor point here and your 9-minute dynamic trio there. There's your buy point, okay? there's really nothing to do all day. You had a major point right there. If you had an MIT there, it slashed through it. If you had an MIT there, you took profits. It went up and hit a minor point, came back and touched the major point, and the dynamic trio popped up there. You bought it back. And then it's just doodly, 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 do all the way up to the next major point. And there's
That's where you would have started taking your profits.
I would have taken profits at the next major point. I don't take profits at minor points, but I do expect them to create reversals. See, this was a minor point outside of the previous day's range, but it wasn't. It was like a 15th. It was like a 15th harmonic aspect. So I didn't between minor planets. So I didn't attach a great deal of significance to it. But it was worth noting, you know.
Yeah.
So you said take the profits at that first major point,
Mhm.
and then as soon as it retraced and began back up again, that was time to get back in.
Well, yeah, you had when it came back and touched that major line again. That major line became the buy once price took it out, and it came back to touch it. And right there on that bar,
Yeah, it looks like
if you become familiar with the way the dynamic trio works, on this bar, this 1 minute bar, when it closed, that dynamic trio popped from up here, down here to up here. And as soon as that dynamic trio popped up and hit that major point right there, I would not waste a moment in buying that. And I would go ahead and use that planetary support point as a stop. Even though, again, if you know how a dynamic trio works, if the price had gone below that point, the dynamic trio would have popped back to here.
So,
But I still use the planetary point as my stop because I know that just the fact that the dynamic trio came up and slammed it on the close of that 45-minute period or that 9-minute period is enough power to get the trend going again. So, you know, the dynamic trio is dynamic. It can move. You know, it'll move to give price room to breathe. But if I was wrong about that and I was able to get a good fill, like say right in here, I wouldn't risk more than that 1 point or 1.5 points that I have to get back below that planetary line.
so you're suggesting to put the stop just below the DT in this case, or right on it?
Well, in this case, as soon as that bar closed, the DT popped up to that and right onto that major line. And even though I know that if price took that point out, the DT would pop right back down, I would still use the planetary line as my stop. You see, and you'll understand what I mean when you go home and you watch the dynamic trio, the way it works, because in this situation, it wasn't what I call locked. Okay? It didn't get locked. It wouldn't get locked until that 9-minute period closed.
Okay, that's it.
And by then, price is up here. But then you had another decent buy right in there. You see? And if you missed that one, you had another decent buy right there. You got the dynamic trio.
Open up.
Oh, I'm sorry. Yeah. We had another good buy right in here. When it came back near that planetary line and the dynamic trio popped up again, we had another good buy right here. Even better one.
Where?
Up here. On the dynamic trio when it came back near this line. And there was no doubt about where we took our profits. It was you came right into the zone. And you notice this line at 9:55 was a triple. That was a triple hit, so it was very powerful point. Yeah.
Is the galactic trader set up to use satellite also?
Yeah.
It is.
Satellite. Well, it depends on your feeder. As long as the company that's SP Comstock.
Yeah.
Yeah, we use SP Comstock here in Florida in our computers. Yeah. Yeah, we got the big dish behind the house. SP Comstock is good. Oh, Mom's cutting me off. SP Comstock, I think, is very good. They're very fast.
Well, I use the intraday minute by minute, and sometimes they're off.
Are they?
8.
Everybody's off.
I know.
Everybody's off. There's just some are more off than others. So you can't expect real time to be actual real time. I mean, the information's got to get from the pit to the guy who's putting it into the computer, all the way through the line to you and into your computer.
I've been told that can take as long as 5 to 15 minutes.
So, well,
Just to key it in.
I don't know. Yeah, in a fast market, absolutely. In a fast market, absolutely. The guy, you know, the guy's just going to watching and going, oh my God, you know, and trying to keep up with it, you know. And the people who are keying in the trades at the broker's desks, you know, are even farther behind than that. I mean, in a fast market, it might take you an hour to get it filled back, you know. If you see it, if you had a number come out on the bonds and it jumps up 2 points, and you had a stop in there, don't count on getting your fill for at least an hour, you know. Oh yeah, I know. You could be filled on the extreme of the move, because not always. One time I had a stop and a short stop on the bond, and they traded down, and they hit a point and just shot right back up, and I got filled on the way back up, 8 ticks higher than where my order was. So I got filled on a short at a higher price. I got a better fill than you know, but that never happens.
When you place your stop, when you use the crosshairs and you find out where the dynamic field is, you place it like dead on, a couple ticks below.
Dead on.
Just dead on.
Dead on. I'm very exacting, you know. I mean, you know, that's why these guys like me, the guys I talk to, because I'll call them up and I'll say, well, we're going to sell it at 926.4.
You just get it to work on the other.
Yeah, and that was, I'm referring to that trade, and you know, and that was a great sell, and it was 926.4 was the high. So, you know, and like when we hit that 965 yesterday, the aspect coming up is at 965.44. The high was 965.5. They traded only tenths now, so that's as close as you can get, really.